Did rising mortgage rates cause you to put your home buying plans on hold? Well, if they did, you're in luck because it looks as though lower mortgage rates are on the horizon. So, how can that be? You might be asking. Didn't the Federal Reserve just raise interest rates again at their last meeting? Well, as a matter of fact, they did. But when the Fed raises rates, it impacts car loans, credit cards, personal loans, home equity lines of credit, things like that. Inflation is the real enemy of long-term mortgage rates. So as inflation moves, so does mortgage rates. So today we're going to dive into that just a little bit. I'm going to share the latest projections on where mortgage rates are heading and show you how changes in mortgage rates impact home affordability. So we're going to dive into that right now. Hi, this is Andrew with the Andrew Smith team here in Frisco, Texas. And as I mentioned just above, as inflation moves, mortgage rates follow. So at this point in time, I just want to show you this quick graph here. So this is showing what inflation rates have been doing since March of 2020. And if the pattern of this graph looks fairly similar to what mortgage rates have done over the past 18 months, you would be correct. So at the beginning of 2022, mortgage rates were at 3% before rising to over 7% by October of 2022. And since that time, mortgage rates have been declining. As a matter of fact, they're currently bouncing right at around 6.5%. They were at 6.375. They jumped up to 6.75, and they've been holding steady right around that number due to some uncertainty in the economy on where everything is heading, and also based upon the current impasse in the government on the debt ceiling negotiations that they're talking through right now. But if you look at mortgage rates and inflation mapped together on a graph, as I'm showing you right here, you can see the blue line represents the 30-year fixed rate mortgage, and the green line shows the inflation number. And if you look to the far right side of this graph, you can see that the inflation number, which spiked up rapidly, as we know, has been trending down, and it's now actually lower than the fixed rate mortgage line, which doesn't usually happen. So as you can see, it's usually that green line, the inflation number, is usually trending right below where that is. So that's an indication that mortgage rates are on their way down when those lines crisscross as they have. As a matter of fact, Lawrence Yun, who's the chief economist at the National Association of Realtors, recently said that mortgage rates are likely to descend lower later in the year as consumer price inflation calms down. So let's take a look at all this. What does it all mean to you if you're thinking about buying a home? Well, when you consider what home prices and mortgage rates have done over the last couple of years, I'm sure it will come as no surprise to you whatsoever that housing affordability today is at its lowest point at any time since 1990. So with that, understand that housing affordability is actually comprised of three different components, and those are home prices, wages, and mortgage rates. So positive improvement in any of those areas are going to benefit housing affordability. So if we look at wages first, there's definitely some uncertainty about where the economy is heading, as I mentioned, but unemployment's at a 50-year low. April job growth was stronger than expected, and wages are continuing to rise. So we're definitely seeing positive momentum with regards to wages. That comes back. Now we look at home prices. Coming back on home prices, as there's been a lot of talk about home prices. As a matter of fact, ever since the pandemic hit, there's been talk that the housing market is bound to crash. The crash is coming. It's right here. It's going to happen. And it hasn't. Not yet. And, will it happen in the future? Nobody knows exactly what the future holds. But what I can tell you is there is absolutely nothing anywhere in any of the leading indicators to indicate that any sort of major price correction or crash is on the horizon or will appear in the next year. As a matter of fact, home prices here in the Frisco area and across most of the country did decline. They've already declined. And they're now actually starting to recover. So it's looking more and more likely as though those price declines are now behind us. Now, I covered all of this in detail in a video on a blog post I did last week on my May 2023 housing market update. And I've got a link for that in the description below if you'd like to look at that in more detail. But the main reason prices aren't doing anything is, or are not looking like they're going to be falling, is there's a huge imbalance between the number of homes for sale and the number of people that want to buy. As a matter of fact, here in the Frisco market, multiple offers are common. Once again, not on every house, but on many homes, you are seeing multiple offers and you're actually seeing prices being bid up a little bit. And the idea is as mortgage rates went up, it was expected that there'd be a huge drop off in demand. And that didn't really happen. So in order for home prices to change or decline significantly now, you are either going to need demand to just dissipate completely, or you're going to need a major increase in supply. And that doesn't look as though it's going to happen. So just for some perspective, currently there's 202 homes for sale in Frisco. Okay, now at this time in 2019, there were 829 homes for sale in Frisco. In 2018, there were 1,205. So even though you're hearing a lot of talk that there's more homes for sale relative to last year, historically, we are still extremely low. So the last piece of the housing affordability was mortgage rates. So let's take a look at that for a minute. And declining mortgage rates appear to be the most likely source of improving affordability based upon what's going on in the markets currently. And it's important to remember that lower mortgage rates can significantly impact your mortgage payment on a monthly basis. So if rates were to change just 1%, and for this example, I'm going to say rates are at 7% and they change to 6, and I say that under the caveat that most of the experts are forecasting over the next year rates to come back down to about 5%. So that would show even greater savings here. But if you consider the fact that if you have a home loan amount of $250,000 and rates go down from 7% to 6%, you're going to save about $164 a month. Now, if your loan amount was $450,000, then you're going to save about $296 a month. If you had an $800,000 loan, that savings is $526 a month with just a 1% decrease in the mortgage rate. And as I just mentioned, many of the experts are forecasting that rates will come down and settle somewhere right around 5%. So if you're out there holding on to hope that we're going to see rates in the high 2s or 3s again, or even 4, I don't know of anyone making that forecast. I haven't seen it, and it appears as though that was possibly a once-in-a-lifetime thing, that it isn't coming back. But the rates that we're looking at going forward are definitely significantly better than we have been seeing lately. So with all that being said, what does it mean for you? And, with this information, only you can make the decision that's best for you and your family. But keep in mind that whether you choose to buy or whether you choose to rent, you're paying a mortgage. The question is it yours or your landlord's? Now, I don't say that to indicate that now is a good time for everyone to buy, because it certainly isn't. There are many situations where now is not a good time to buy, and not entering the housing market is absolutely the best decision for you. But the median rent in Frisco right now is $3,150 a month. So when you consider that, you might want to fully explore all of the options to make sure that what you're doing is the best financial decision for you overall. So if you have any questions or a specific situation that you'd like to discuss in more detail, I invite you to schedule a call. I'd be more than happy to talk to you and share additional information, answer those questions so that you can make the absolute best decision for you and your family. A link to schedule the call, again, is in the description directly below. And, if you just want to keep an eye on what's going on in the market, the best way to do that is through my weekly market report. I've also put a link to that in the description below. You can kind of watch all of the current trends, see what's happening, and subscribe to that report so that it is delivered to you, your email inbox directly each and every week. So hopefully that information helps. Again, if you have any other questions and it's easier for you just to try and see if you can catch me on the phone or send me an email, that is always welcome as well. The email address is andrew@theandrewsmichteam.com, or that phone number is 469-296-5230.